will we see continued higher shipping rates? Can we sustain high levels that we've seen?
I think it's good to put the rates a little bit in perspective. Rates were actually quite low for many years. 2016 through the first 3 quarters of this year, average VLCC, the large tanker rates were probably around $25,000 a day on average. So now you've seen a spike to over $300,000 a day, which was in a way unsustainable. It could not be sustained, and over the weekend rates have started to decline.
So what's normal?
What's normal?
It should be normal.
It should be normal. It's a mid-cycle rates. What gives a decent return to the owners and doesn't impinge on demand would probably be in the $50,000 a day range. 40 to 50,000 would give the owners a good return, and it will not hinder the refiners to buy the crude that they need.
Well, I'm glad you brought up the refiners, because there's been lots of little ancillary issues when it comes to the high tanker rates. One of them are in particular Asian refiners, their margins really rolling over because they have to pay a lot of money to transport that crude. There's 2 narratives. One is they're going to keep on buying. The other, demand's amazing. And the other is that they're going to stop buying because it's too expensive to move the oil. Which one's true?
I think refiners in general, they can adapt to higher transportation costs. I think what was in particular this case, it arose so quickly that I think then the refiners decided that some of the less sophisticated ones that have lower margins, they decided to tap the brakes and say, okay, let's hold on, let's see how this settles down, because when you have to pay $12, $13 per barrel transportation on a $50 to $60 commodity, then it becomes quite expensive. So now those rates have come down quite significantly. They're still much higher than where they were a month ago, but they're like at the $100,000 a day level now.
So if they stay there, which is still higher than I think fair value you were talking about, what does that do to regional oil prices? And I just want to focus particularly on WTI and Brent, for example. There is one narrative in the market that you're going to see lower oil prices here in the U.S. because no one's going to want to buy our oil because you got to ship it so far, and the tanker rates are too high. Therefore, oil prices have to correct. Is that the correct narrative from where you see it?
That would be a first in a way that tanker rates would drive oil prices. Yeah. So I don't really see that happening over the longer term. It could if this $300,000 a day market were there to stay, but it's already finished. It's already over. It's way down. So I think I don't see U.S. oil exports or destinations influenced in the longer term by tanker rates.
Are you telling your clients that this sort of volatility and or re-rating for modestly higher rates is something that they have to start prepping for?
Yes. And yes. The rates will be at a higher floor for the foreseeable future.
And what do they do? How do they deal with that, especially if there's volatility involved?
I think the way to deal with it is you can take some hedging positions, so you can charter in some ships for longer periods of time. So even though the rates for spot market voyages went to $300,000 a day, the time charter rates where you can rent the ship for a year, they only moved up to $50,000 or $60,000 a day. So I think oil companies, if they're afraid about the volatility and very high spikes, they probably can hedge a little bit of their needs by taking ships on period charter rather than take everything on the spot market.